We have some crashes to report, folks. Some crashes, also known as buying opportunities. If you've been waiting on the sidelines for buying opportunities, no, it's not the housing market, but there's some things that are crashing significantly. We're going to get into that. Bitcoin is down almost 50% from the peak within the last year. We saw it up at 120,000. We'll get into that. Huge crash, huge collapse. Confidence is collapsing, folks. Anyone that is surprised by what's happening right now, you haven't been paying attention. You haven't been on this channel, because on this channel, we told you this economy was not doing good at all. It looked good on the surface because people were spending money, but we knew it was borrowed money. How did we know? Well, we looked at the debt levels. The debt levels were growing faster and faster and faster. And sure, they bragged about it on the news. Look at all the money people are spending. The consumer is strong. The economy's got gross domestic product at this number, that number. Because people are spending money. Folks, it's borrowed money. It was borrowed money. Most of the money spent going forward will be borrowed money. And the debt is just going to continue to increase. And so let's get into it, folks. I mean, again, nobody is surprised. It's not fun being right about this stuff. Believe me, I would be a lot more popular if I would have been one of the people saying, that everything's going to crash. I've been saying it's going to be inflation, right? But sometimes inflation hurts confidence because people think that things are going to become more affordable, or they think they're going to make more money or get a better job. And then finally, when the masses start realizing, wait a second, I got a better job, but I still can't keep up with the cost of living. When the masses start realizing it, then you start seeing some people getting scared and selling off, right? So let's get into it. We're going to get into all the numbers, the latest news, and also the economic big picture here. First of all, we have this recent headline: job openings plummet in warning sign for economy. The economy, they tell us, is booming, but if you're looking for a job, good luck to you, because you're not going to find it. You might find it, but even if you do find it, it's probably not going to keep up with the cost of living. The Labor Department reported on Thursday that job openings in December unexpectedly dropped. Who didn't expect that? That's my question. To the lowest level since mid-2020, and that was during the pandemic. It's a sign that companies have cooled on hiring despite economic expansion that the White House has framed as the dawn of a new golden age. All these words. Remember the stimulus checks? We were going to get stimulus checks, refund, or what do they call them? Rebate checks. What were they called? Not stimulus checks. They were similar to stimulus checks. In other words, they were going to give you checks in the mail or direct deposit because of the tariffs. Yeah, tariff refund or rebate checks. We told you as soon as that one was announced, it wasn't going to happen. It's been over a year. It still hasn't happened. And I don't think it's ever going to happen. I mean, I should take that back. I think when things do implode bad enough, they'll send out checks again. But it's not going to be because of some money we made off of tariffs. It's going to be because people are broke and people are going to get evicted. People are going to lose their houses. People are going to be homeless or live in their cars. It's going to be like a pandemic type of emergency stimulus check, or checks, I think will at some point be re-implemented. The research firm Challenger Gray and Christmas reported companies announced plans to cut more than 108,000 positions last month, more than double the layoffs tallied from January of the year prior. The payoff processing firm ADP said private sector firms added just 22,000 jobs in January, a sign that tepid payroll growth and jobless claims spiked last week, folks. This is no shock, no surprise. Nobody should be surprised by this. All right. Before we move on to the next topic, the next headline, I'm going to just respond to people in comments that I know what you're going to say. But JJ, I was just at the mall. Everybody's shopping. The mall was packed. Lines around the corner at the restaurant last night, at the club, lines around the corner. Everybody's got money. Everybody's doing fine. Folks, if you don't understand what's going on by now, folks, this is borrowed money. The average person you see lined up at the club buying $13, $15 drinks, they're loaded up on debt. They're barely scraping by. And they're probably at the club to drink their blues away. Right? 7 out of 10 people living paycheck to paycheck. That's not good. And a lot of those people you see dancing, smiling, having a drink, that's because they need to drink in order to be able to smile. Because a lot of people are unable to smile without artificial stimulus, right? Or what's the word? Stimulation. Layoffs in January, the highest to start the year since 2009, according to Challenger. Folks, the highest since 2009. That was the onset of the financial crisis, right? And sure, they can do things, they can lower interest rates and do things to kick the can down the road and make it look like the economy's doing fine. And they probably will do those things. We're going to have a new Fed chairman coming out. He's probably going to drop rates, and they'll probably find a way to send out money to people. But what's going to happen? People are going to go out and spend it and make prices go up more. And the problem just gets worse and worse and worse. Did the cost of living come down because of all the stimulus from 4 or 5 years ago? No, it went up, and it's going to go up more. It's going to go up more the more they try to fix this. The more they try to fix it, the more problems they create. All right, we should all know that by now. The more the powers that be try to fix it, the worse it gets. Right? What they need to do, hands off, let everything collapse, let prices come down, and start again. Start from something with a solid foundation, not this house of sand built on, house of cards built on quicksand. I mean, whatever you want to call it. U.S. employers added, okay, we already talked about that. U.S. employers announced, I had to sit here and look at the number again because I couldn't believe it. U.S. employers announced 108,435 layoffs for the month. But here's the number. That's up 118% from the same time a year ago, folks. That's more than double. And it's up 205% from December 2025. The total marked the highest for any January since 2009. Wow. At the same time, companies announced just 5,000 new hires, also the lowest since January 2009. Wow. Job openings fell sharply to 6.5 million in December, the lowest since September 2020. So layoffs, the highest in almost 20 years. The lowest hiring in many, many years. I mean, is this the implosion? Is this where it begins? Or, like I said, will they find new ways to kick the can down the road? Either way, the story ends up the same. It's going to be harder for most people at the end of this. And we're going to hear from a few people actually towards the second half of the video, giving their take on the cost of living and how they're scraping by, and some people not scraping by, right? We'll get into that here in a few moments. All right, but let's get into some of these price corrections, and they're pretty big. Gold down 3.7% to $4,795. Silver down 19%, down to $71.70. It's going to be a buying opportunity if it keeps going down. But here's the big one that I think a lot of people are paying attention to today. Take a look at this. Folks, here it is at 1 year chart. We're looking at Bitcoin. I'm going to hover over the peak if you can see my mouse. It peaked in October, right around 124,000, folks. We've just plunged now down to about 64,000. Almost a 50% drop from the peak. Amazing, amazing. I told everyone here I wasn't buying Bitcoin at these levels. I told you once silver hit $60, I wasn't going to buy. I may start buying again below $60. Bitcoin, I probably won't buy until it gets below 50,000. Even then, I won't be buying a whole Bitcoin. I'll be buying just a fraction of a Bitcoin just to kind of get a position in. But keep your powder dry. Keep cash available because there's a lot more scares coming up. We haven't even seen the beginning of the scares that I think we're going to see in this economy, folks. Things are bad. We've never been more dependent on debt than we are right now. Also, we've got some news out of RV business. RV business. U.S. consumer confidence collapsed sharply in January. The confidence index, why were they ever confident in the first place, fell by 9.7 points in January from a revised 94.2% in December. This is another collapse. Confidence collapsed in January as consumer concerns about both the present situation and expectations for the future deepened. Concerns deepened. Said Donna Peterson, chief economist for the conference board. All 5 components of the index deteriorated. There's also something called the present situation index. It fell as net views on the current business conditions dwindled to just barely positive. I'm surprised it's even barely positive. And folks, it's just going to continue. I mean, what are they going to do, or what are they going to say to make people more confident? Remember, a year ago, it was like, oh, we're going to bring all these jobs back. Manufacturing is going to come roaring back. We told you right here on this channel. I think we were one of the first ones to tell you the jobs aren't going to come back. Companies are not going to pick up and relocate based on tariffs when they know that there could be a new guy coming into office in a few years to completely get rid of the tariffs, right? They could come here and get set up a few years. Yeah, they might get set up, and then all the tariffs are gone in a few years because somebody else is in the office. I told you, companies are not going to come back to the U.S. because of the tariffs. We were right, but again, it's not fun being right. It's not glamorous being right, right? Sometimes I wish I wasn't right, but this is what the numbers and this is what the facts present us, right? I'm not leaning left. I'm not leaning right. I don't belong to one party. I don't have an R or a D after my name. I'm just telling you the facts based on the numbers. And the numbers tell us that this whole economic activity and economic growth, as we've been calling it, is based on borrowed money and debt and consumption. And we're also seeing, starting to see some big sell-offs in the stock market. The major indices, S&P 500, the Dow Jones. I would not be buying any broad indexes at this level. There's certain stocks that I'm looking for dip buys on right now. But as far as broad indexes, not any of the major indices right now until we see something bigger. And I think there's a lot bigger corrections ahead. Now, do I think it's going to be the collapse that ends all civilization and that's never going to recover? No, I think that any correction or collapse will ultimately be bought up, so to speak, and they can throw money at this. They can conjure any amount of money out of thin air. They can conjure up money to throw at this, but usually they do it after the correction, right? They usually let it correct, and there's been small corrections, right? 2020, we had a big correction. There's been some small corrections since then, but could this be the beginning of the big correction, right? We'll find out. But if it is a big correction, guess what's going to happen? They're going to conjure up a bunch of money. Look at the $200 billion they conjured up to push interest rates down for mortgage rates specifically by buying up a bunch of mortgage-backed securities so the banks can loan out more to get the housing market moving, right? They can conjure up money to rescue these markets. The question is, how big and deep will the correction be before they conjure up the money to do that? That's how you make money, folks. Maybe if you call the bottom, you can make a lot of money. If you buy some and you don't buy at the right time, maybe you can still make some money because ultimately the markets will go back up to new all-time highs. That's the system of money that we have right now. It allows any correction to be stopped and then markets, prices push back up to new all-time highs, folks. Rinse and repeat over and over and over again. It's just a matter of when and how well you're prepared to take advantage of this. And folks, that should make it clear. I'm not saying that this is the big one. I'm saying the conditions are ripe for something big to occur, a big drop, a big overall economic decline, or maybe even a crash in certain markets. But if it's not, then it'll happen at some point. We just have to wait, be patient. There's always going to be corrections. Over the past 10 years, though, it almost seemed like there wasn't going to be any sort of corrections at all. But what do we see? A 50% sell-off in a lot of cryptos and Bitcoin, some even higher. I've only talked about Bitcoin. Some of them even more. We saw 60, 70, 80% drops in some of the cryptos. Manufacturing is in retreat, and the tariffs aren't helping. Headline out of the Wall Street Journal. I think it's a very unbiased publication. I think it just talks about the facts that jobs are not coming back for the most part, just like all the numbers we talked about at the beginning of the video. Levies on imports were supposed to bring back the golden age of U.S. manufacturing. They haven't worked so far. The manufacturing boom that was promised for Americans is going into reverse. After years of economic intervention, fewer Americans work in manufacturing than at any point since the pandemic ended, over 5 years ago now. Worse now than since at the end of the pandemic, right? And what's going to make jobs come back? Well, the only thing that's going to make jobs come back, companies will come back when the cost of living is low enough here where they can pay workers lower wages, right? Because you don't have to keep giving raises and paying people enough to keep up with the cost of living if the cost of living is lower, obviously, right? Simple. I mean, everybody knows this. That's why other countries are getting the jobs and the U.S. is losing the jobs. All right, people, but I have a couple things I want to run by you. Take a listen to this.
There are homeless people who have to work 2 jobs in a country where people often say that if you just work hard, everything will be fine. This has been the reality in Asia and Africa for decades. If nurses and teachers can't afford to buy a house, what are we doing this for in the end? This is not the language of politicians. It's not even from a famous economist, but it's the voice of ordinary Americans themselves, who are trying every day just to avoid being pushed to the margins of society. We are always taught that hard work will be rewarded, and that this society respects those who keep it running. But reality is saying the opposite. When workers are no longer living, but merely existing. When work no longer leads to stability, but only prolongs the race to pay. When America started to resemble the places we used to say, "At least we're not like them." That's not an economic recession. That's probably the erosion of the social contract. In this video, we'll talk about the true cost of living in the US in 2026, not through TV statistics, but through what people are burdened with every day. Let's get started. Let's start with a number that sounds very familiar. $85,000 a year. This number sounds good, doesn't it? But that stability was only true 15 to 20 years ago. And in 2026, we need to look deeper after taxes. $85,000 a year, excluding federal and state taxes, mandatory insurance, etc., leaves about $5,800 per month. Now let's put that amount into real life. Rent plus utilities. About $3,000, and it's not a luxury house. Just a place that doesn't leak and isn't too far from work. Food money. About $3,000 for the basics. What about vehicles, insurance, and gas? Remember, because in America, going to work without a car is almost a fantasy, and you'll lose about $700 more. Healthcare and insurance, at least $600 not including serious illness, is just in case. Phone and internet, zero. No one can live without these anymore. Let me help you with that. It'll be about $8,150 in total. And this is an awkward moment of silence. You earn $5,800, but to live normally, you need $8,150.
All right, stop right there. You can argue some of these numbers. Obviously, everyone's got different costs, different areas, different lifestyles, different budgets. But the fact is, most people just have to borrow money just to survive here. Take a listen to this. Quick grocery haul before we continue on to the other information here.
So I just got home after 4 months away and I did groceries. And this is what $73 worth of groceries looks like in Las Vegas, January of 2026. Ridiculous.
$73 worth of groceries, Las Vegas. And you thought Las Vegas was bad. Take a look at what's happening in New York. New York. Some of you may be from New York watching this. How's my accent? New York. All right, take a listen.
January.
Sorry, let me start over.
We are officially in January 2026, which means in New York City that all of the transportation costs are going up this month. So the subway is going up. My Metro North is going up. And then because I live in a co-op, my maintenance is going up. My maintenance started out at $1,200 when we moved in 3 years ago. Now I pay monthly $1,400 something dollars. It's like 14 and change, okay? That's a month, folks. I pay $1,400 to maintain my co-op, okay? I got a letter that said our budget for 2026 was $1.5 million.
Just like an HOA fee for other people that don't call it co-ops. HOA, co-op.
I want to see the receipts. I'm asking for an itemized bill as to what this is paying for. Mind you, the superintendents of my building keep it impeccable, but also that is a lot of money, okay? That doesn't include my mortgage. My mortgage is $2,300. because we bought this place in 2023 and the interest rate was 7%. Again, mind you, had we bought this place in Brooklyn where we were living, probably would have been $1 million. Here, it cost us $385 in Westchester County, specifically Scarsdale. Now, I don't live in bougie Scarsdale because I don't have a giant house. I live in a co-op. I live in an apartment, okay? And yes, it is a beautiful place to live. It is what I like to call a bubble. I live in a bubble. But living in Brooklyn is twice as expensive.
She said, what, $2,300 for the apartment for the mortgage payment, $1,400 now for maintenance, what they call the co-op. So $3,700, folks, to live in an apartment.
Is expensive. And we got our co-op somewhat renovated. We also just renovated the bathroom last year and spent about 18 grand on that. Actually, it's probably more like 20 grand. So we have this beautiful bathroom now, I will say, but we've been spending a lot of money lately and we don't make a lot of money. In transparency, again, my husband and I make probably under 200 grand total. We are both blue collar workers,
Two incomes.
I would like to call. He's an electrician for the city. I'm a recipe developer at a magazine. So I'm not making gold. You know what I mean? We're not rolling in the dough, so to say. All I'm saying is the cost of living keeps going up and up and up. And I just don't know how we're going to afford it. Like, I really just don't know how we're going to afford it because our jobs are not going up. My paycheck is not going up, which is my own problem, I know. Like, and welcome. That's why we're supplementing our income. Well, trying to.
It's most people, folks. Most people's pay raises and their incomes are not going up as fast as the cost of living. All right, people, drop a comment. Let me know, is this the beginning of something much, much larger? The beginning of a prolonged economic downturn, if you will? Or is this just another blip on the map on the way to new all-time highs and nothing changing, just cost of living continuing to rise? Well, we already see corrections in a few different assets right now. Are they buying opportunities? Drop me a comment. Let me know how you're doing and hope you guys enjoyed this update. Please, I'll read your comments on this one. If I get 100 likes, I'll try to respond to every positive comment. Though I'm not going to respond to the haters, but every positive comment, I'll try to reply. See you down below in comments. Keep stacking, everybody. Bye for now. Peace.